Hi dear friends, today is Wednesday, June 17. As usual, let's look at the charts for the euro and the British pound and make up trading plans for these instruments. The single European currencies survived pressure during the Asian and North American sessions. So did the pound sterling. Traders resumed their long positions, so the Forex market settled down ahead of the Federal Reserve's policy meeting. We will discuss this later, but I want you to note a memorandum project consisting of 14 paragraphs. The US and Iran are expected to sign this document on Friday in Switzerland. In essence, the sides have acknowledged that hostilities should be stopped in all countries involved, including Lebanon, and agreed on a ceasefire for 60 days. The memorandum also stipulates that Iran is responsible for removing mines in the Strait of Hormuz and reopening it for full-fledged navigation. However, the document doesn't say anything about charges on transit after 60 days expire. All in all deliveries will be resumed in full. In terms of economics, the US will be obliged to compensate for partial rebuilding of Iran's infrastructure after the war. For this, the US will allocate $300 billion. Besides, Washington will lift sanctions from Iran and release frozen funds. The US also seeks a solution for the nuclear program and pushes Iran to give up nuclear weapon production. This issue is not included in the memorandum and will be negotiated separately. If the ceasefire is signed this Friday, it will give a boost to risky assets and weaken the US dollar. Now let's check the economic calendar for today. In the first half of the day, the UK will report its CPI for May. The index is expected to grow 0.3%, following a 0.7% increase in April and March. The annual CPI is likely to be at 3% after 2.8% in April. If the actual figures are higher than expected, this will raise expectations that the Bank of England could venture into a rate hike. Now, the market doesn't price in this scenario. That is why traders are anticipating the inflation data to adjust their positions. Strong inflation data will open the door for raising interest rates. The CPI for the Eurozone is expected at 3.2% in May. The core CPI is projected at 2.5%. Last week, the ECB responded to high inflation and raised the policy rate. Hence, the inflation report will hardly impact market sentiment. The highlight of the day is the Fed's decision on interest rates. The odds are that the US Central Bank will maintain the status quo. Kevin Warsh will conduct his first press conference as a Fed chair. If the US is going to lift sanctions from Iran and the Strait of Hormuz will be reopened, Kevin Warsh doesn't need to insist on raising interest rates. Kevin Warsh was opponent as Donald Trump's nominee, and Trump wants low interest rates. So, the market doesn't expect hawkish remarks from the new Fed chair. In turn, his soft stance will be bearish for the US dollar. Alternatively, if Warsh announces hawkish rhetoric for the near future, this will strengthen the US dollar. Meanwhile, markets price in a rate hike in the US at the year end. Now let's watch our charts. The 1-hour chart for the euro-dollar pair suggests 1.1620 as a good point to sell during a false breakout with the target at 1592. If it's broken, the door will be open to 1566. Hawkish remarks by Warsh will push the euro-dollar pair to 1535 and 1506. Here I will plan long positions bearing in mind an upward move of 20-25 pips. Meanwhile, all factors such as cautious Kevin Warsh and the completion of the US Iran war imply a weaker dollar. The instrument could settle above 1620 and then climb to 1645 and 1664. If the Fed is clearly dovish, the euro-dollar pair could rise as high as 1.1684. Here, I will blend short positions 15-20 pips down. The pound-dollar pair is following a similar story. In case of lower than expected CPI, the pound-dollar pair could fall from 34.41 during a false breakout targeting 34.16. If broken, the price could drop to 33.90. The hawkish Fed will push the instrument down to 1.3359 and 33.31. From there, I will plan long positions during a dip, bearing in mind a move up 25-30 pips. Long positions are possible from 33.90 and 34.16 on the condition of a false breakout. If UK inflation is stronger than expected, the instrument may settle above 34.41 and climb to 34.62 and 34.81. The highest target will be 1.3509. From there, I will consider sell positions during a bounce. Good luck to everyone.